Another bad news for money market fund investors, including me. But am I quitting? No, 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 no. This is the time to pump in more money on the money market fund. Don't quit, stay there. But I have to share with you this news because I know at the end of this video you're gonna ask, hey Joseph, should I quit now? No, 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 don't quit, stay there. Actually, if you ask me, I would say pump in more cash. And if you do not even know which money market fund to invest, by the way, most of the money market fund interests are below 10%, but this one has a decent return. On the comment section, there is a link I've pinned there. You can join a Tika Money Market Fund and start investing. But I have to tell you this. The thing is not looking so good for money market fund. Why? Because the CBK, Central Bank of Kenya, who is that? That is the prefect of all the banks we have in this country, has actually lowered the interest rate even further. Can you imagine this? For those who have been watching my videos for some times now, we started when the CBK interest was around 13%. Now we are at, can you imagine this, at 9.25%. By the way, if you ask me, that means good for the economy to some extent. Okay. I'm saying that with a pinch. I'm saying that and take that with a pinch of salt. If you're an economist, you know what that means. When the interest rates are lowered, their likeliness to have what we call the inflation and what have you. But anyway, hold on. Right now, by the way, if I give you the statistics, what they are saying from the Central Bank of Kenya, the inflation is around 4.1%. But anyway, let's get on the business fast. This is Good Joseph. In case you're watching me for the first time, you're wondering who is this dude. My name is Joseph. I make videos as far as the investments are concerned. And I do this every day. So you have all the reasons to go ahead and subscribe. Leave a comment on the comment section. Hey, and if you need my services in one way or the other, the premium services, of course, that is my number. Shoot me a text on my WhatsApp. Kindly don't call, text me on WhatsApp. Let's get on the business now. Here we are. See, Central Bank of Kenya has actually lowered the interest rate. Today on this video, I'm not gonna over-explain because sometimes back I've been explaining to you what. Oh yeah, I'm looking for this pen. I've been explaining to you how it works. Now, last time, like 2 months ago or less than 2 months ago, the interest rate from the CBK, for those who are Americans watching, it's an equivalent of a Federal Reserve. The interest rate was around 9.50%. It simply means it's the rate at which the CBK is establishing as the base lending rate. Therefore, it means any and every bank, which is a commercial bank, can actually lend its money using this as the base point, anything above it. But obviously, there are some of the capping that they ought not to go beyond it. By the way, the Central Bank of Kenya is actually rubbing shoulders with several banks. I'm suspecting some of the banks their licenses might actually be revoked because they are ignoring. Can you imagine this? Banks, that's why I told you sometimes back here, banks are not your friends. Imagine the Central Bank of Kenya is lowering the interest rate and it's telling the banks, please, reciprocate that to the people, to the common mwananchi. That's what we call them here in Kenya. Common mwananchi simply means a common citizen. Try and to lower the interest rate. Meaning, if you go to a bank to borrow money, the banks are being instructed to lower that interest rate, to make that credit affordable so that you can stimulate. It's kind of a way of stimulating the economy to some extent, okay? There's something called the quantitative easing, meaning a government can actually get some cash and give it to some institutions, like what happened during the COVID-19. And of course, this is another way of doing it. Those are different ways. I ain't gonna go into those details of the economies, but they're just ways of stimulating the economies. Now, the CPK, the interest rate now, it was around 9.5%. Now, they lowered this by 25 base points, okay? This is usually responsible of the MPC committee, that is a committee under the Central Bank of Kenya, Monetary Policy Committee, is the one that is responsible for all those things, okay? You can be following this news from the Central Bank of Kenya, or you can actually stay here, I'll be informing you. Now, they lowered by 25 base points, which means now it is 9.50, subtract 0.25, therefore it becomes to 9.25%. I hope that mathematics makes sense. But anyway, the point here is this is the new current lending rate that we have in the Central Bank of Kenya. That is what we have. Somebody might be asking, okay, fine. So how does this affect my money market fund? How does this come into place? It simply means when you see the government is lowering the interest rate, it simply means they are likely also to borrow at a lower interest rate. Remember one thing, Kenya is under distress when it comes to debts. actually the news are there, you can check this and verify. The Kenyan debt has actually bypassed the 12 trillion Kenyan shilling, which is like almost to our economy, by the way. Yeah, because our economy is 118-ish there billion USD, and now we are at over 10 or 11 100, is it 111 billion or something like that? See, we actually on our way to borrowing all what we have in terms of our GDP. Anyway, that's a story for another day. The point here is they are doing this, well, based on what they are saying, they are doing this to make sure that they make the credit affordable even to them when they are borrowing. Because when they do this, therefore, when they float their treasury bills and the treasury bonds, now this is where the money market fund is coming in. When they float the treasury bills and treasury bonds, they're gonna pay a smaller or lower interest rate. For instance, we had some times back when the T-bills, the government securities, we call them the short period paper, was actually going for 16%. A treasury bill. How many here remember that time? We used to enjoy a lot. 16% was the best. If you did not invest back then and you are watching Good Joseph, I would only say woe unto you. There's no way you can blame me because I was saying. So it was at 16%. Right now, as we speak, we are at 9%, some even at 7.5%. And I think actually is 8%. We are at 8%. Literally, the interest rate has been halved from 16 all the way to 8%, meaning government was borrowing at 16%, meaning when you did lend, the government was paying you 16% interest on top of the money that you are lending the government. But now the government is paying you 8% of that money that you're lending them compared to what was happening, let's say, 2 years ago. That means the credit is becoming affordable to the government, but to the investor, it's not really a good news, isn't it? Anyway, I think it's a win one way or the other. We may not get the good interest rate, but the economy might be heading on the right direction. Again, guys, don't stone me. I'm only saying based on the numbers here. The economy on the ground might reflect different things, but I'm explaining economically what happens here. Now, remember one thing. When the treasury bills goes down, remember the treasury bills were at 16%. That time, MMFs were at equivalent of this. You can even get some MMF were at 16%, isn't it? How many can attest to that? Yes, because any money that you invest in a money market fund here, that money is further invested in the treasury bills. Because these companies, once you send them their money, your money, they reinvest that money in the treasury bills. So therefore, the rate at which the MMF is giving is dependent on the rate at which the treasury bill is giving. As a result, when this goes down, they are directly proportional. If this goes down, therefore this goes down. This goes down further. This goes down further. And we are seeing that all the way from 16, we are now at 8% and still going down because the base point has been cut because the government is trying to make the credit affordable to them so that we don't distress our country in terms of the distress and something like that. By the way, how many here did watch the news that Kenya now has managed to save, is it 25 billion per every year? Confirm that number whenever we are paying the Chinese loan as far as the SGR is concerned. Why? The government of Kenya had a negotiation with the Chinese government to make sure that our loan is not quoted in terms of dollar, but in terms of yen. Is it yuan or yen? Or I think it's yuan. I don't know. That's China's money. So now that means that will actually save us an equivalent of 25 billion. I think that was wise. I mean, you give a credit where it's due, isn't it? I think that was wise. 25 billion. I mean, that okay, let me know again. Now, I was about to say that can Pesha. Now you're about to stone me. Now, see, this now has come to this point. Therefore, the bills goes down and this goes down. Now, why do I say that it means good news for the stock market? We usually have two types of market, by the way. We have two types of market. If I may use this in a layman's language without going into the details, we have what we call the stock market and we have what we call the capital market. The capital market is composed of these things like cash or cash equivalents, like the bills, bonds, mutual funds, MMF, fixed deposit, all that, where we have a lot of liquidity. The capital market has a lot of liquidity, and that's why the fluctuation is like this, yeah? So the capital market is the bills, the bonds, the whatever. These are more or less the low-risk investments kind of an area. So this capital market is solely affected by such changes of the Central Bank of Kenya and other ways that we will not discuss for now. So that is the capital market. Now, what happens, investors like you and me, okay, what happens, they are here, okay, they usually check. Is it this side or is it this side? Obviously, you say you put your money where your mouth is, isn't it? So whenever we have, for example, like a year ago or 2 years ago, stock market was not performing well. When we were having interest of 16%, there was a time we even had a treasury bond at 18.4%. Okay, so the investors usually consider be like, okay, we are getting at 18.4%, and here my capital is preserved and I'm assured 100% is a low risk. So I'm like, okay, instead of going to the stock market to speculate, I would rather get my money and put it in this capital market, example, the treasury bond, and get this interest. So they gravitated towards the capital market. That's why you find there was a craze on money market fund. Hey, money market fund, treasury bill, treasury bond, a lot of people pumping money into that. If you are a risk averse individual, they tend to gravitate towards the capital market. Now, once you accumulate a lot of money into this area, this one is neglected. And of course, the demand is not there. And then all of a sudden, things happen. Now, the other way is happening. Why? The capital market interest is going down based on what is happening with the central bank and other factors. Therefore, this one is becoming more undesirable. People are not putting money into this. And that's why now, as I speak, there is a craze about the stock market. Why? It goes like this, you know. But the thing here is, what gives me a strong belief that the stock market in Kenya might actually, continue on this trajectory for a period of time. It is because of this. Why? I was reading on the idea of the government is to make sure these interest rates, they go way down, even to 4%. Can you imagine? The US is around 5%. Can you imagine if we go up to 4%, where you go to a bank and you borrow money at a rate of 7%? Can you imagine that? Can you imagine that? At 8%. That would be so amazing, isn't it? Okay, in a way. But then it means the capital market now will be way low. For example, if you go to America and invest in mutual funds or treasury bills or like this one, they give you at a 5%. It's way low compared to we are getting around. Right now, we are talk of 8, 9, 10, 12, around that percentage. So therefore, that's the reason why I said might be bad news for the money market fund, but might be the good news for the stock market based on those numbers. It's usually a very delicate balance because when this one goes down, this one goes up. So I'm wondering, can there be a situation whereby the capital market interest is low, but then we have a crash on the stock market? Because the thing is, with these markets are always cyclical. Meaning, they usually go like this. They go down, they go up. There must be economy actually resets or recesses. Like it goes down, it goes up, it goes like that. It goes. So I'm wondering when that time will come, because for the investors, that would be a great opportunity. So the only thing I can tell you guys, take time to study on this market, find out what is happening, and you can be able to take advantage and grow some cash with that particular thing. Hope I've shared something with you that can be of benefit, and yeah, I hope we will be able to see you in the next one. So this is Good Joseph. In case you need my services in one way or the other, that is my number. See you there.